Trends in Forex. There is a popular saying that the trend is your friend. So you better keep that relationship and avoid breakups. A trend in Forex refers to the general direction in which the price of a currency pair moves over a period of time. Identifying trends is essential for making profitable trading decisions. So let's look at the types of trends. First, we have the uptrend, also known as the bullish market. Price moves higher, making higher highs and higher lows. This indicates a strong buying momentum. Here we have a graphic representation of a bullish market. The price moves up and forms a higher high. It retraces a bit and moves higher above the previous high, forming a higher high. It moves low, forming a low that is higher than the previous low. It moves above the previous high, making a higher high. It retraces a bit and forms a higher. Looking at a real chart, this is how the market will appear. The price moves up, low, up above the previous high, making a higher high, retraces down, creates a higher low, moves above the previous high, forming a higher high, retraces down, and moves above the previous. Second, we have the downtrend, also known as the bearish market. Price moves lower, making lower highs and lower lows. This indicates a strong selling pressure. Therefore, traders usually look for selling opportunities or short positions. So this is a graphic representation of a bearish market. The price moves down, creating a lower low. It pulls back up, creating a lower high. Then it moves further down, lower than the previous low, creating a lower low. It pulls back, creating a lower high. Then it moves further down, creating a lower low, that is creating a lower low, and pulls back up, creating a lower high. So this is how the real chart will appear. The price moves down, it moves up, it further moves down, creating a lower low, it moves up, creating a lower high, moves down, creating a lower low. Then we have the sideways trend, also known as the range market. In this, price moves sideways with a horizontal channel. There is no clear higher high or lower lows. Traders buy at the support and sell at the resistance. So this is the graphic representation of a range market. The price will usually move around a horizontal channel. This is how the real chart will appear. There is a resistance line above here, then we have a support line here. So the price will usually range around this level, creating there is no significant price structure. So most times, some traders stay out of such trading conditions. Then some buy at the support, targeting the resistance above here. Then sell at the resistance, targeting the support down here. So how to identify trends? First, we can use trend lines. This is so simple but very important. While using trend lines, on the uptrend, we draw a rising trend line along the higher lows, and on a downtrend, we draw a falling trend line along the lower highs. You can see in a bullish market, the price creates higher highs and higher lows. So we connect the higher lows with a rising trend line. So as long as the price is above this trend line, we say the market is bullish. In the bearish market, we connect the lower highs with a falling trend line. As long as the price is below this trend line, we say the market is bearish. All right, moving on to our charts. We open the toolbox and we have it here, and we look for our trend line. It is the third among the favorite objects. This is if you're using MetaTrader 5. We click. In an uptrend, we join the higher lows. It doesn't have to touch each and every wick of the candle, but this is how it will be. So usually, if the price is above this trend line, then it is bullish. immediately it breaks through this trend line, then we can say the market is now bearish or it's going into consolidation. This is on a 5-minute chart and it can work on any other chart. So in the 1 hour, we can add a trend line. You connect. Usually you consider the structure that is near the current price. There's no need of connecting the higher lows of data that is far. So connecting the higher lows of the current price action is very important. So we have this. So as long as the price is above this trend line, then our market is bullish. If it breaks through this trend line, it means either the market is consolidating or it's going to enter into a bearish market. In a bearish market, we connect the lower highs. I have it here. Yeah, this trend line is supposed to be about 45 degrees. You don't need to be so accurate that you have to connect all those candlesticks and all those wicks. It's just a rough estimate. You can just draw any line that is about 45 degrees. So as long as the price is below this trend line, then it is a bearish market. If it breaks out of this trend line, then we can start considering it to be bullish. Moving further, we can also use the moving average, usually the 200 moving average. In this case, when the price is above the 200 moving average, it's a bullish market. And when the price is below the 200 moving average, it is a bearish market. When you click on the chart along this line, you will see a wave. You'll see a wave with a cross. That is the indicators tab. So you come here, this plus. When you tap, you look. These are the list of the indicators that are in the MetaTrader 5. So you tap moving average. So you can set. So the period you set to 200 moving average. Then the method. We have simple, exponential, smooth, then linear weight. You put the smoothed moving average. And you can also choose the color if you prefer. So I choose white. It's been applied. So as you can see, when the price is above the 200 moving average, then it is bearish. So this is the current price. So here you can see the market is bullish. And this side, you can see when the price is below the 200 moving average, then it is bearish. This is on the 4-hour chart. You can go lower to the lower time frames. This is the 15-minute chart. You can see here when the price is above the 200 moving average, then it is bullish, because this moving average is acting like a dynamic trend line. Then when it is below the 200 moving average, it is bearish. Then instances where you realize the price is so close to the moving average, there is no significant direction, whether it is up or down, then that's why we say it is ranging. As you can see here, the price is just around the 200 moving average. So here we say it is ranging. So you wait until it either moves below or above. We can also use indicators such as the MACD, the RSI, and others. When the price is above the 50 level, it is a bullish market. So we look for buying opportunities. When the price is below the 50 level, it's a bearish market, and we look for selling or short positions. Using indicators, we can come to the indicators tab and look for the RSI, which is the relative strength index. We have it here. When you click, this is already set, the period is 14. You can just leave it at default, then you apply. So when you apply, this is how it is going to appear. And expand it a bit. This is how it is going to appear. So by default, they have a level of 70, which is overbought, and a level of 30. I just added the 50 level. So we can customize this when we go back to the indicators tab, we click on RSI and we can do some adjustment of the settings. We look for levels. Levels here, we remove the 30 and we remove the 70. Yeah. Then we can also change the color to my favorite color, that, and we save and apply. So now you see we only have the 50 level. So as we had learned that when the price is above this 50 level, we are looking for buying opportunities because the price is bullish. You can see in this case here the price is below the 50 level, so it is bearish. You can see here it has been above the 50 level, so we can say it is bullish. You can say that this is on the 4-hour chart. Have you seen here it has been below the 50 level, so we can say it is bearish.